Hello guys, this is Adriana. Happy Friday and welcome to my channel. If you're not familiar with who I am, I'm a real estate agent here in Miami and I've been investing in the stock market for a while already. So don't forget to subscribe and smash the like button for the YouTube algorithm. In today's video, I will talk about a stock that I've been buying for a few months now. And as I said in my first video in my channel, it's been reducing its market value drastically. This stock is called Carnival Corporation, ticker symbol CCL. If you would like to know what is my average cost in the stock, when exactly I bought it, and why it has a big potential long term, let's say 5 to 10 years from now, stay until the end of the video because I'm going to show some screenshots of my portfolio. This is a cruise company that have had thousands of ships, millions of passengers over the year, family with kids, retiring people, bachelor people. Carnival Corporation is the most popular cruise company in North America. They also operate in Australia, Europe and Asia. But they are not only Carnival cruises. They also own AIDA, which is the most successful tourism business in Germany. Costa being the largest fleet in Europe with an Italian style, Cunard, Holland America Line, P&O Cruises, Princess Cruises and Seabourn Cruises, which is more of an ultra-luxury cruising vacation. The links of everything that I will show in this video I'll link down below in my description. Now, let's talk numbers. Carnival is actually consistently growing its revenue year by year. Its market value right now is $30.17 billion with a total asset of $45.05 billion and a liability of $19.69 billion, leaving us with an equity of $25.36 billion. Which, in my opinion, is a very healthy relationship between the equity and the market value. Their EPS or earnings per share is being growing since past years, as you can see here. Yes, I know, it dropped the last year, but over a 2-year perspective is still a very good. And obviously, when you invest in a company, you can not only see what they've done or what they're doing right now, but also need to know what their expectations are. First thing I want to show you is that the analysts are expecting an EPS of 4.4 for 2020 and 4.86 for 2021, which in my opinion is a very fair value. Don't be surprised if they beat those expectations because, as they said, we have increased our focus on growing on board revenues and have invested in new marketing capabilities to further engage our guests by bringing to life their cruise experience. Meaning that they are not only trying to increase their passenger ratio, but also trying to increase their revenues inside the cruises with beverage packages, shore excursions, air packages, specialty restaurants, internet packages, photo packages, onboard spending credits, and gratuities. According to analysts, they are expecting also a 4.10% growth in revenue for 2020 and 6.3% growth for 2021, which is phenomenal because that means that they are accelerating growth. Now, another great thing about this company is that they have been beating expectations on earnings for the last quarters. As you can see here, they beat expectations by 11.40% in the first quarter of 2019, 8.20% in the second one, 4% on the third one, and 24% on the last quarter of 2019. Right now, today, Carnival has a forward PE of 9.21, which is lower than normal on their history. In comparison with Royal Caribbean with a forward PE of 11.31 and Norwegian with a forward PE of 9.84. Another reason why I'm investing in this company is because of the dividend the stock offers. Their forward dividend yield is 4.47%. So that means basically that as long as the company keeps their revenue and a good operating expenses, you will get your 4.47% back on your money. And taking into consideration that they have a payout ratio of 47% makes it a better deal to buy right now because it means that they can still raise their dividend even more. As you can see here, they have increased their dividends already 5 times in the last 5 years. So I can say that everything under $50 for me on this stock is a buy. Let's talk about their competition. We cannot take into consideration only their cruise industry as a competition because actually they are competing with all the tourism industry because when someone is going on a vacation, they just want to have a good time and relax. And nowadays, people have a lot of options. But on the cruise industry, their biggest competitors are Royal Caribbean with a market cap of $25.09 billion and Norwegian Cruise Line with a market cap of $11.6 billion. These three companies, Royal Caribbean, Norwegian, and Carnival, are 90% of the cruising industry, and still Carnival is the biggest one. One important thing to mention is that it's really difficult to penetrate this market and be a competitor of these companies. I mean, you know how much money you actually need to have only for one ship. Imagine having lots of them and in very good conditions. It's a very expensive industry in my opinion. And another great thing is that, as they said, we continue to invest in customers and market insights to better understand our guest decision-making process and vacation needs, enabling us to identify new marketing opportunities and further grow our share in their vacation spends. That means that they are consistently reinvesting in their brand and creating modern ships, making their guest experience phenomenal. As they said, they are expecting to launch on a lot of cruises right now. They already have 17 cruises scheduled for 2025. At this point, the stock will continue to fall a bit because of all the coronavirus situations, since travel-related stocks get affected by this type of news because people start canceling their cruises or their plane tickets or hotels and everything because they are scared that they can get the virus. As you can see, yesterday the Carnival Corporation stock fell 7% because a Carnival cruise ship, roughly 7,000 passengers on board, has been blocked from leaving an Italian port after a passenger from Macau experienced possible coronavirus symptoms. The good thing is that the passenger was officially diagnosed with a common flu. So imagine that. If the stock fell 7% plus because they thought that it was a coronavirus, can't imagine what would happen if someone actually gets the virus in one of their cruises. Now, let me show you my average cost in this stock and when exactly I bought it. As you can see here, I started buying it on December 4th of last year, 2019, with a price of $44.18. Then I started buying like crazy this month of January 2020 at a price of $49.69, $48.66, $48.54, $45.64, $45.89, $45.53, $42.64, and $42.50. As you can see, my average cost is 45.74%. Right now, I'm down 1.44%, but I'm not worried because, as I said before, with all my analysis that I did, I'm confident that these companies still have very good potential to grow in the future. As I said before, if this continues dropping, I will continue buying because it's a very good deal, since nowadays it's really difficult to find a company that you like, that you think will continue growing with a dividend yield of 4% and or higher, and a payout ratio of under 50%. I say it's extremely difficult to find this type of opportunity right now in the market because, as you can see, everything is just going up and up. So I would like to know what you think about this company, if you have this stock or if you're planning to buy. Well guys, that was all for today. Don't forget to subscribe and smash the like button for the YouTube algorithm. And you can also go and follow me on my Instagram. Share this video with your friends and family. Thank you and see you next time.